it's going to maintain its value because it's scarce, just like gold is scarce. Gold is scarce. The supply of it grows about 1% per year on average over a very long period of time. When the price spikes, yeah, that percentage will go up because people have more incentive to mine for more gold. Well, something is going to happen this year with Bitcoin, which means that its supply growth is going to drop below the supply growth of gold. It has been growing 1.8% per year, the number of Bitcoin out there, for the last 4 years. In April, it's going to go through what's called the halving, Halving, halving. That growth rate will be cut in half to about 0.9% for the first time, falling below gold. Now, why is Bitcoin a scarce asset? Gold is because it's hard to find and hard to mine. Why is Bitcoin? It is because it's mathematically metered to have the growth rate every 4 years. So in 4 years, it'll start growing 0.4%, not 0.9% or 0.5. And the number of Bitcoin there will ever be in the world is 21 million. And right now, we're at 19.5 million outstanding. And it's only going to 21 million. If you look at that 19.5 million, and you can see this network's completely transparent, 15 million of that 19 million are in what we call strong hands. They have not moved their Bitcoin in more than 155 days. That means they're hodlers.
Bitcoin has experienced a dramatic surge in price since the approval of the Bitcoin ETFs, and the majority of experts believe that this is just the beginning. With the Bitcoin halving event quickly approaching, Bitcoin is bound to explode, and here's why. In her latest interview, Cathie Wood noted that Bitcoin's supply growth rate has been around 1.8% annually for the past 4 years. However, following Bitcoin's halving event, this rate will halve to approximately 0.9%, marking for the very first time it falling below the supply growth rate of gold. This means that Bitcoin will undergo a supply shock, becoming scarcer than gold itself. Make sure to stick around to the end of the video where Cathie also explains how disruptive innovations like Bitcoin and AI have shaped today's technology. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Cathie Wood with her expert insights on Bitcoin and other disruptive innovations.
Think about that, 15 out of 19.5 hodling, right? 1.5 million left. Yeah. Institutions have just gotten involved. The SEC gave it the green light in the form of an ETF, and we were one of the 11 launched. We're doing very well, thanks be to God. Yes. So think about that. What does that mean? If institutions really want to be involved, they will have to pull with pricing the hodlers into selling their Bitcoin. 2015, Bitcoin was $250, right? We still think it's just begun because institutions are just now becoming involved. Pretty exciting. We think it could scale. Depends on we have a base case, a bear case, a bull case, but it could scale from 43,000 to 650,000 or $1.5 million per coin, or even higher as institutions get in. But the most important thing is we talk about these themes is be prepared for huge volatility. There's the hypes, and so there are the booms and the busts and the booms and the busts. The trend line should be up, but you have to prepare, especially young people, for volatility. The seeds for everything that is happening today were planted in the 20 years that ended in the tech and telecom bubble, right? And then there was the crash. So all the seeds were planted there. But the reason the crash happened is because the technologies were not ready. And even if they were kind of getting ready, the costs were prohibitive. So just to give you a good example of the second one, in 2003, but we were thinking about it in the late 90s. In 2003, the first whole genome was sequenced. We were able to understand all of the 6 billion bits of code in one person's body. So that we could understand what was going wrong. That cost $2.7 billion just for one person. And it took 13 years of computing power. We were not ready for prime time, but biotech was a big part of that bubble, right? The technologies weren't ready. We didn't get the cloud until 2006. We didn't have the 2 very big breakthroughs in AI, deep learning in 2012, and then transformer architecture in 2017-18. Those technologies were not ready for prime time back then. The capital flowed aggressively into them and shouldn't have. Today, they are ready for prime time. We are starting to scale the 5 major platforms, which are robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the life sciences space. And I know, Andre, you have a big interest in the healthcare space, and that's probably going to be one of the sectors most transformed by these technologies. So we believe they're scaling now, and this is perfect investor psychology, and I'm very comfortable. People are scared. I'm comfortable as a portfolio manager because I would prefer to be investing in something controversial when there's a lot of FUD out there, fear, uncertainty, and doubt. And that's because there's people fearing for their jobs, their businesses, meaning in the financial industry, and they don't want to be wrong. Well, guess what? If you don't take risks, you're not going to get returns. But you have to manage those risks and manage around the volatility, use it to your benefit. Disruptive innovation is going to transform the world as we know it today completely in the next 5 to 10 years. I think most investors are not equipped to do what you're doing, number one. And one of the reasons is because after the tech and telecom bust, that was in the early 2000s, and then even more so after the global financial crisis, and they began to think, okay, I have to invest in the public markets. I have to invest close to the S&P 500 or close to the NASDAQ or close to the MSCI World. And so their reaction time, that skill set that I learned when there were no computers and no cell phones and no spreadsheets unless we did them by hand, the reaction time that I have to information, which is constant, it's constantly bombarding us, right? A little bit like you on the court, although I could never be I don't know if the milliseconds that I take things in matches yours, but I think we'd make a great team. So
for sure.
Anyway, you take all of that information in, you need to make decisions quickly. Traditional world is losing that talent because it's letting an index lead the way. Indexes are all about what has already happened. The stocks at the top of those indexes are there because of their past success. But if we're right on disruptive innovation, that, again, is going to turn sectors upside down, inside out, people aren't going to recognize them in 5 to 10 years, that is exactly the wrong way to invest. So taking information in real time, constantly, every day. If you're in the crypto world, or we'll call it more the digital asset world, it's 24/7 now.
So there's Cathie Wood's expert insights on Bitcoin and other disruptive innovation. Cathie highlights that these technologies, such as robotics, AI, blockchain, and genomics, are all basically ready for implementation, and it's only a matter of time before these technologies disrupt all of the world's societal systems as we know them. Cathie predicts that disruptive innovation will reshape industries over the next 5 to 10 years. With that, she also stresses the importance of managing risk in the face of investment fear. With the upcoming Bitcoin halving, these last few weeks before April may just be one of the most crucial times for making careful investment decisions and making sure we don't pass up on the opportunity of a lifetime. If this content resonates with you, don't hesitate to subscribe and like the video. Your engagement helps continue to bring you insightful and timely content. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.